Welcome, dear traders. Asian stock markets are growing today following the overnight rally on Wall Street. After a massive sell-off that pushed all three benchmark stock indexes into bearish territory, stocks rose sharply on a Wednesday amid the falling US Treasury yields. How did it affect forex currencies? What else had an impact on them? Watch our video review and find out. Risk sentiment returned to the market following the Bank of England's economic reforms. The UK government is planning to cut taxes while the central bank is tightening monetary policy, so the regulator had to step into the bond market to stem a market rout. It pledged to buy around 5 billion long-dated bonds over the next few weeks. This move triggered a decrease in the world government bond yields, including US ones. The two-year Treasury note yield has been declining for 2 days in a row after steady growth over the past few weeks. It helped the stock market gain momentum. Investors are also closely monitoring the comments of the Fed policymakers, which are largely hawkish. President of Chicago Fed Charles Evans believes that the watchdog will raise the interest rate to the 4.5% and 4.75% range by the beginning of 2023. President of Atlanta Fed Raphael Bostic spoke in favor of another 75 basis point rate increase at the November meeting. At the moment, inflation remains too high. Returning inflation to the target level will require further tightening, he pointed out. However, analysts fear that many central banks do not know at what stage of a recession a rapid decline in inflation may take place. Traders, of course, did not price it in. Therefore, risk aversion is likely to return due to market uncertainty. The US dollar is assured to approach new highs amid such a scenario. After a slight fall on a Wednesday, the greenback is recovering today versus its main rivals. It appears that traders are not ready to sell the US dollar yet. Moreover, a rally triggered by the Bank of England's intervention has already eased, so risk appetite is likely to wane soon amid gloomy prospects of a global economic growth. Although yesterday the US dollar index showed the worst performance in more than 2 years, it's now hovering near 20-year high of 114.78, and it's currently trading at 113.65. Despite being overbought, the greenback could advance to 115 and approach the male high of 115.32. In the Asian session, the US dollar index was moving in the bullish channel of 112.98 and 113.79. After the Bank of Japan intervention, the Japanese currency was able to regain momentum versus the greenback. The Bank of Japan sold US dollars for the first time in decades to stem the yen's sharp falls. The intervention in the currency market bolstered the yen. However, it will hardly help the yen in the long term, as the main reason for its depreciation is still relevant. This is why the yen is likely to fall steadily because of the divergence in the monetary policies of the United States and Japan. The yen is losing ground as it's slowly but surely approaching the critical level of 145. In the Asian session, its quote slightly decreased to 144.72. However, the US dollar is again a leading currency in the pair. Hence, it's again moving in the upward corridor of 144.03 and 144.81. Commodity currencies also took advantage of yesterday's pullback of the US dollar. The Aussie scored the biggest gains and tested the level of 0.6527 compared to the economies of other developed countries. Australia is doing really well. The employment rate is at a record high, retail sales are rising, and the business confidence index is in a positive territory. Nevertheless, these strong fundamental factors did not help the Australian dollar resume steady growth. After a rebound of the US dollar, the Australian currency slid into the bearish corridor of 0.6437 and 0.6526. In the Asian session, it was trading at 0.6456. And the New Zealand dollar also showed a short-term rise. The Kiwi recouped some of its losses, climbing to 0.5732. After that, it retreated. In the Asian session, the NZD-USD pair diverged by more than 1% to 0.5671, and it's now moving in the downward range of 0.5648 and 0.5736. And that's all for now. Subscribe to our channel and have fresh market news at your fingertips. Feel free to leave your comments down below, and see you soon.